Hello, thank you very much for inviting me to share my thoughts on this important event that is Regional Investors Seminar for Awareness. But I'm going to speak about a group of people who are missing in this room. I see professors, I see college students, I see entrepreneurs, but I also miss quite a few people in this hall. My presentation is titled as From UPI to Ownership, Democratizing Capital Markets for Those Missing Millions. I'm going to touch 4 issues. India has democratized financial access. Let us democratize financial ownership. Let us make missing millions investment inclusive. Financial literacy is not the binding constraint anymore. Informal entrepreneurs, specifically the street vendors, can be India's next retail investor class. Let me pick up one by one. India has democratized financial access. It's time for us to democratize the financial ownership. But before I elaborate that, let us see the data that I've collected from AMFI. And when we say data, I call that as a financial inclusion success story. The AUM over a period of time has increased from 12 lakh crore in 2015 to 82 lakh crore. Over these years, the amount of money which has flown into the mutual fund market has gone up to 82 lakh crore. A majority of this money is exclusively equity funds and debt funds. And there are other hybrid funds, ETFs and all. And this equity fund, around 90% is held by individuals. And within these individuals, 58% by retail individuals and 38% by HNIs. 35% is by HNIs. And a very small percentage by corporate entities. But who are these retail individual investors? They're the salaried middle class, urban household, affluent individuals, a profile of those retail investors are sitting in this room today, and for whom this investors awareness meeting has been planned. But where are these people? Where is this retail investor residing? You'll be surprised to know that according to AMFI's classification, they provide the data as T30, top 30 cities, and beyond top 30 cities, B30 and T30. 82% of the AUM belongs to T30, top 30 cities. Only 18% is from other rest of the cities, hundreds of cities. And this 82% of the AUM is in fact accounts for or held by, or these 30 cities, top 30 cities account for 20%, less than 20% of the population. Is there anything wrong with that? Of course not. Everyone has a right to invest and earn money. But my concern is the mutual fund industry, the regulators, and the organizations like AMFI, which are manned by the best minds of the countries, the analysts, advisors, accountants, tax experts. So these are the people, the best minds of the country, are working for, are providing their service to a small part of the entire country. So to summarize, as we mentioned, there is a financial inclusion. Bank access is very high, both formal India and informal India. This informal India is, because I couldn't get a better word, is to convey the message that, which captures that invisible millions of people. Bank access now improving. UPI access is very high for both formal and informal. Credit access for both formal and informal is limited or improving over a period of time. The financial wealth or the ownership of the financial assets is relatively high in formal India and very, very low in informal India. Is this a problem? As of now, yes, if continues as it is. But I see this as a challenge, as an opportunity for both the regulator and organization like association, AMFI, and also the consultants, advisors, professors sitting in this room. That is why I say it's time for us to democratize the financial markets. India has demonstrated entry into the financial system, democratized by democratizing the entry into the financial system. However, the next challenge is to democratize the participation in the wealth creation. For whom? For this missing million. To go beyond T30, and penetrate into the various parts of the country. Who are these missing millions? Maybe street vendors, maybe gig workers, maybe domestic workers, farmers, and many such classifications. However, for this presentation, I would like to focus on one of these categories, which is street vendors. And so the next point is India's informal entrepreneurs are digital integrated, but let us make them investment inclusive. They have bank account, they have UPI access, they also have credit access, small loans, mudra, PM Swanidhi. But most of these end up to the consumption. What is needed is making them to invest in the markets and create wealth. And this is where the challenge. And is it possible? Of course it's possible. But the people say that financial literacy is a problem. So that is a third point. As per our understanding, financial literacy is not a binding constraint anymore. We did a small research for the street by taking the street vendors of Bhubaneswar, funded by the institute, my own institute, XIM. We constructed an index called Financial Capability Index. We interviewed, surveyed more than 4,000 or 5,000 street vendors of Bhubaneswar. And the Financial Capability Index has been constructed on the basis of the World Bank model. And a questionnaire was circulated, and personal meeting interviews by a group of students under the guidance of senior researchers. And we found this. This was only for the street vendors because the focus of my presentation is also street vendors. What we saw was more than 60% of the the people whom we surveyed, the financial capability index is greater than 5. Okay, more than 18% is in fact 0.75 and 1. 1 is the best. If I test that, put the FCI questionnaire to people sitting in this conference hall, I know that all of you will get 1. So 60% have more than 0.5 and only 8% have 0.25. So financially literate, they know how to manage money. They do business, they handle money, they know how to fix price, they know how to buy goods, how to sell goods. So FCI, financial literacy, as reflected through FCI, is reasonably robust here. We also found very interestingly, people even without education, the financial capability index is 0.4. And a primary education or a secondary education, with the higher the education, higher is the FCI. Of course, with the graduation, FCI is very high. But what impressed us that even people without education, any qualification, they did not go to school or might have gone up to class 2 or class 3. Even for them, the FCI is not bad. We also try to understand the income and FCI. Interestingly, even persons having sales less than 1,000, anything above 500 to 1,000 sales per day, FCI is around 0.44. And of course, with a higher income, higher qualification, better opportunity to read and understand, the FCI was high. So our understanding is this constraint, which we often feel that financial literacy, low financial literacy, making the street vendors keep themselves away from the markets, is not a very strong argument. The real constraint is not financial literacy, is a product mismatch. We need to design. This is where the role of AMFI and SEBI, other researchers sitting in this room, to think about product mismatch, think about designing a product suitable for this group of people. Even now, they use money they invest in chit funds. We know that Orissa, West Bengal, large number of people lost money there. But still, the investors, the street vendors often trust a local money lender. If you ask them to give money to a money lender who will promise to give 2% interest per day, or maybe sometime 5% per month, or doubling their money within 1 year or 2 years, with such promises. So because they trust the people who take money, because they get money whenever they want, they think they'll get money whenever they want, liquidity. Sometimes it's easy to give money and take money. The onboarding complexity which is there with markets, stock market and bond markets or debt markets. And also the communication. Sometimes some of the pamphlets, advertisements are in English, in Hindi. So therefore, the real constraint in our understanding is a product mismatch, liquidity concerns, trust deficit, onboarding complexity, and product communications. So our problem is, the question before us, in front of us, is not how do we educate people enough to buy our product. That is financial literacy. But the issue is about how do we redesign the product around how people actually earn, save, and borrow. So it's not financial literacy. It's designing financial products, financial reengineering, financial innovation, and creating products which will be suitable for, relevant for people at the bottom of the pyramid. Some can question that are we exposing the people at the bottom of the pyramid to the complexity and the risks of the capital market? The answer is yes, but they are not averse to that. In fact, by giving money to investing money in chit funds, they're taking bigger risk. The mutual fund market today, capital market today, is because of the role played by AMFI and SEBI, is more robust, more transparent. Liquidity is also there. But if we can design products, sell it properly, improve communication, maybe it's possible to touch those missing millions. Within them, let me now focus on one particular category under the missing million, is the street vendors. Can they become the next retail investor class? Answer is, of course, yes, they can. Street vendor, the word street vendor has been defined. There is a special central act, State Act, 2014. And the act says around 2.5% of the urban population can be street vendors. So if you use that as a benchmark, and approximately in India, we may be having 1.5 to 2 crore street vendors. And all of these are potential investors, potential participants of the mutual fund markets and the capital market. Who are these people? They sell, they're the daily earners, micro entrepreneurs. They're becoming digital merchants. They receive money, pay money through various digital forms, methods. They are disciplined, informal savers, and they have a reasonable surplus, and more so cash surplus. There are people with at least 1,000 rupees liquid cash every day on a daily basis. Can we tap that money? Can we get that money into the capital market and protecting the interests of those people? So we made if you pick up a small number to examine the potential, the size of this market, assuming that 500 rupees per day, and if that is collected, and we are able to get 360,000 crore annual inflow. If it is 50 rupees per day, which every vendor can, is 36,000 crore. So 360,000 crore, and if you see the entire AUM today is 82 lakh crore. This is 3.6 lakh crore. Not a small money from a very small focused group that is street vendors. Is it possible? Answer is yes, it's possible. For that, you need to design products. You have to bridge the gap of selling. You need a different type of selling. You have to create the trust among these people. And this money is there already. All we have to do is to create products and sell, get that money. Going forward, both SEBI and AMFI have a big role to play on this, in designing products, in communication, in creating robust systems, improving transparency, creating that element of trust among the people, encouraging youngsters to get into this line to create solutions, software solutions, mobile solutions to bridge the gap between the market and this missing million. In that respect, I would like to mention, some solutions available. One of our students, a group of students working pro bono for last 2 years, have designed a platform called Unhu, Unheard Humans, which provides a platform where we can get informal workers and informal entrepreneurs, domestic workers, and bring them, create awareness about this micro mutual funds, micro insurance, micro saving products with this element of trust and transparency and confidence. So, India transformed millions of citizens into digital payment users in less than a decade. Can India now create opportunities for millions of these informal entrepreneurs, invisible Indians, unheard humans, okay, and make them to participate and in the capital market and benefit from the capital market? We are confident it's possible. And I'm also confident that the proactive regulatory body like SEBI and a very strong and proactive association like AMFI, it is possible to touch the missing millions and make them part of this ever-growing capital market and ever-growing mutual fund markets. Thank you very much. But before that, I would like to end by quoting my favorite poet, Khalil Gibran, from his famous book, The Prophet, and on a chapter called Buying and Selling, I found the following few lines very relevant for this particular event. And before you leave the marketplace, see that no one has gone his way with empty hands. For the master spirit of the earth shall not sleep peacefully till the needs of the least of you are satisfied. Thank you very much.